Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and forex outlook for trading on 11/24 of 16. Now, keep in mind, tomorrow is going into Thanksgiving, okay? Tomorrow, probably not many people going to be trading in the markets, so you do have to keep that in mind. We may not have anything happening tomorrow. I know that I'm not going to be trading. Most of the people in my room aren't going to be trading. It's going to be fairly slow. So just kind of keep that in mind going into tomorrow. But if you are going to brave the elements, we'll have you covered at least. So, taking a look at gold first out of our big six. Now, out of these, we're looking at gold in a relatively decent downtrend. Now, the downtrend, how strong is it? Well, if we zoom out, we're still kind of in a range. Now, the big area of interest here is simply that we're not quite towards the bottom yet. We're really trying. We're seeing a lot of effort from the sellers, and they couldn't quite get back down. Now, they did manage to get down into this kind of cluster of support down here, and they've actually formed new support between 6.7 and 5.6. But that all said, we couldn't get a full cycle down to that major low. Now, we did get the trap off of that high, and that's what we were talking about in the Outlook newsletter. Beautiful drop lower. That's kind of, exactly what we were looking for. I don't think you could ask for a better drop than that. And they were finally able to make it to a new low. But then they kind of fell apart. They pushed too hard. Now, with that aggression to the downside, a lot of times it's going to have to take a break. They spent all of their ammo on this drive lower. They're going to have to reload a little bit before they make another attempt. So you may just end up going sideways into the overnight session before we find an area of resistance, maybe even a quick pop higher before looking for that drive lower. Now, I do have an area of support marked up here. I'm not necessarily looking to buy a bounce out of that area, but I want to use that area as kind of a key support level. If we can't break through this, that's a big problem, because if we do break through it, then it's a free fall down to the major lows. And, that opens up a good 40, 50 tick drop. But if we cannot break that low, that's where we start thinking, okay, well, maybe this is a range, and we cycle back up towards the highs. So at the moment, I wouldn't mind selling, but it needs to find a place to be an opportune seller, right? We've gotten way too aggressive to the downside. Let the market correct, let it come into an area of interest, whether it's a shallower high or even a little bit higher. Find an area of resistance, wait for the sellers to show up, and then dive it right back down to the lows. So looking to be a seller, just not quite yet. Switching gears over to the crude oil. Crude oil is, it's okay, right? We have a bearish descending wedge working its way lower. We found a lot of support between 47.18 up to 47.30, and now we've had a big old push right at the end up to that prior major swing. They obviously trapped that level because otherwise we would have been able to push through it. Not so much, right? All of that wick on the top kind of tells a different story here. So it looks like they trapped the highs, and generally speaking, they're going to look for an area of support, which came in, at the moment at least, right around the retest of that descending wedge high. That's why I left it on there. Now, that being said, this level that we have right here, a lot of times what I'll like to do after they've kind of broken down, I don't want to lose sight of them because they can become important levels. So you change it to a slightly less thick line so you don't lose sight of it. It's still there, but then you can draw up the new one. And this is the new top of the potential kind of expanding megaphone on the way down here. So still bearish. The buyers have obviously completely fallen apart, but doubtable that the sellers want to sell this far down into an area of support. So what I would rather see is a quick pop higher. Find sellers above, likely a trap above this little double top right here, above the 48.10 area, and then look for selling opportunities to drive the market back down. Maybe just retest that prior support, or maybe dive back down to that 47.30 to 47.18 level. So looking for selling, and I would love to see a trap above 48.10 to get that going. Over on to the Dow. Now, the Dow and the S&P look very similar. The S&P is an absolute mess. The volume is very low. So the Dow at least gives us something to work with. So the Dow versus the S&P, you can probably just use the analysis between the two, if I'm honest. So overall, we had a big pullback kind of day, right? Big run up in the overnight session, got a little bit exhausted. Sound familiar, right? Got a little bit exhausted. Took a break, pulled its way back, found an area of support right around that 18,950 area, and popped itself right back up towards the highs. Now, that area of support that we found is a key area of interest. Not only is its kind of formation in that the sellers just completely failed. I mean, look at that drive lower, and they couldn't keep it going. So obviously there is a huge block of buyers waiting here. So if it ever comes back between 18,935 to 932, that will be a huge area of interest. That said, we're at the highs, and now it's not looking so great for the buyers. The buyers had this whole run up, and now they finally get to the highs, and then they just kind of fall apart. It looks like everybody took their profit and called it a day. So that forms this area now between 19,002 down to 18,996, not to mention the humongous round number at 19,000, as an area of resistance. The buyers are obviously not interested in buying all the way up here. What I would rather see is an attempted push outside of the highs, find maybe even just a wedge top. It could be a little more aggressive. It could be slightly a little bit more on the angled side of things. Find a trap above that high now that we've put in a top, and see if the sellers can take it back down to, at least back to the prior area of support ahead of 18,980. So looking to sell the highs, looking to buy the lows. Obviously buying the lows has a slightly stronger emphasis, but the buyers look like they're heading out to vacation right now. So I would much rather look to sell at the highs, maybe with an offset, or look to buy a nice pullback. Jumping over to the Forex market, we have the Euro USD. Now the euro, we're forming a little bit of a flag here. Big run higher, and then the sellers try taking it back. Now you'd expect to see something like an ABCD leg, but we're not getting that. We had the big run up, we had the pullback, and then this happened. This more so looks like a bear flag that's waiting to attempt to break out. We do have a major rejection up here with that huge wick over here, and that does also form the top of a channel, which we're resting on right now. So the fact that we have the top of a channel or a wedge, depending on how you draw it, a major area of resistance with obviously a huge amount of sellers up there, we have an area of interest between 63.89 to 63.15 looking to cycle itself back down to the lows. If it does manage to break out, we're dealing with a range, so remember, you want to buy low and you want to sell high, and this is kind of in the middle of said range. So if you do make it back up towards the highs, looking for 65.76 to 65.29 is the next block of resistance to shove the market back to the lows. If we do find a push back to the downside and this top holds, which it doesn't look like it's going to do very well, but if it does, and breaks down, then we would be looking for support between 59.15 to 58.36 and anywhere below that, as long as it doesn't go too far. Right now, though, it looks like the buyers have control. They're not letting go. Even though we have a possible bear flag, I think right now it looks more like they're trying to trap in sellers before they make that second leg to the upside. Onto the pound dollar. The pound dollar, nice bearish trend. And this is like a picture-perfect bear trend, right? Beautiful legs on the way down. Can't really ask for a much clearer picture than that. So in terms of the downside, sellers obviously took profit down here, right? Their profit area between 23,916 to 23,850, that's going to be the next major objective for sellers. This is a strong downtrend, so we need to be looking to sell. We're not looking to buy, even though the buyers currently own the market. This is more likely just a correction with sellers taking profit and causing a rise back up. So the next area of resistance, 24,418 to 24,360, and then the big boy, the one that is everybody's got their drool going like crazy, 24,662 to 24,636. I would love to find a push up into that area to then dump the market right back down to the lows. Are we going to hit it? Yeah, maybe, right? But that is the big boy. This is the one that a lot of traders would love to see. So keep that in mind. We have the big one, and then we have the slightly more aggressive one. And then onto the dollar yen to wrap it up on this final day of Thanksgiving week before heading off to vacation. We have a ascending wedge. Now, not a very strong one by any means, but this is still bullish. We're making higher highs. We're making higher lows. Everything is still trending. But wait a minute, right? We found a lower high. That's not quite right. Now, we haven't made a lower low, so it's not like we're dealing with a trend reversal or anything like that, but we are stagnating here a little bit. So what I would really like to see is a dip down into major support, and the major support right now would be around these lows, 884 to 826 or so. And that would find a beautiful little bounce, major rejection down there before. So if we can get a pop down there to that area, we'd love to find some buying opportunities to try to drive the market back up and finish the job off. Now, because of this lower high, this is a little bit of a red flag. We may not be able to find the buyers making it all the way back up to this high. So we have a falling area of resistance to keep your peepers on, because we might not be able to make it all the way back up. So if you are looking to buy down here between 884 to 826 or even lower at 634 to 558, you're looking for that potential falling resistance to be the objective instead. Runner targets, yeah, you may be able to still find a little more juice to it, but that falling resistance does have me a little bit nervous. So that's going to do it for this one. Make sure to play it safe going into the Thanksgiving week. It can be really nasty. I know I'm not going to be trading through this Thanksgiving holiday, and I know a lot of other traders aren't going to be either. So if you're going to hang out in the markets, just be a little bit careful and take your time. Make sure to make a plan, follow the plan, trade the plan, follow your rules, and you will be A-okay.